Going to start the recording and it's on. So enough of chit-chatting. Let's get to the topic and let's start the backtesting session because that's why we are all here. So, okay, welcome everyone. It's Flipping Markets here, or Marcel, if you like the Marcel more, and John is here also. Welcome everyone. Let's start the backtesting session of this Sunday, the first backtesting session of April, and this is a bonus backtesting session again, because I can't leave you without backtesting sessions. And first, I would like to ask everyone to mute themselves because I can hear the background voice from some of you. Or I will just manually mute everyone. Just a minute. Mute all. Okay, perfect. So let me just generate a random number as usual, because we always generate a random number and backtest that day, which pops up. Random number generator. Okay, perfect. And which day is it? 3rd of April. So let's just test March. So from the 1st, how many days were in March? 30. Okay, so from the 1st to the 30.
31.
31, yeah?
Yeah.
Yeah, actually 31, sorry. So 31, generate 28. That's on last week, yeah? Yeah, that was on last week. So the 28th of March, let me just replay the price on that region. Where is it? 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 What am I actually doing? Sorry, just the Discord popped up. Can you see my EURUSD chart, guys?
Yes.
And just the chart? Nothing?
Yes, just the chart,
Yeah,
and you
okay.
are on the 1 hour time frame.
Yes.
Okay, sorry, just having some troubles with the Discord. I will shut it down. Okay, perfect. I will open the chat once again. Perfect. So where was I? Where's it? Where is it? 28th of March. Here is it. Okay. Sorry, guys. I'm just a bit slow because I had a killer leg day and I'm tired as hell. So yeah, my legs are literally shaking. So that's my brain. So I just started analysis on the 4-hour chart. Okay, here we are. Perfect. So let's begin the backtesting session. Sorry, guys, once again. Okay, let's start on the 4-hour chart. What can we actually see on the 4-hour chart? As you guys may know, we are always starting the analysis on the 4-hour chart. And we have to do one more thing before starting on the 4-hour chart analysis. And what's that thing? What do we have to do?
Check the news.
Nikita, yeah, thank you. Checking the news. So let's see the 28th news in March. Apply settings. Okay, perfect. So as you can see, on this day, there aren't any high impact news, just 2 low impact news with yellow folders. So we don't give a shit about these news. This will be a perfect day to backtest without high impact news. So we can expect for good movements, good medium impact volumes, medium volume movements. So let's just start analysis on the 4-hour chart. And actually, I'd like to analyze the full chart right here. We've talked about this region several times in the previous live sessions, previous recap videos, case studies, etc., etc. But we have to go through this price action region once again because it's really, really important. Because every single time you do your backtesting session, whether if it's with yourself or with a friend or with anyone, you have to analyze the full chart. Okay, the full chart, not just the previous price action region, the full chart that you see on the 4-hour chart. So let's just start the analysis here. Okay, we talked about it several times. Price has tapped the 4-hour demand zone, or this was a daily demand zone. Yeah, let me just check. I believe this was a daily demand zone down here. Yeah, this was a daily demand zone. So price has tapped the daily demand zone down here. And after a daily demand tap, it changed character to the upside, right? After this, price has created a higher high, higher low bullish order flow to the upside. As you can see, after a change of character, here was the high point, here was the last strong low point that created a new high point. And this high has proven to be weak because this high couldn't break below the last strong low point, right? So after this, price has created a new strong low because this strong low point couldn't break above the last previous weak high point. right here. And actually, this was the weak high point because this doesn't really count as a high point because this was just a liquidity sweeping movement and it didn't body break the structural high above. It was just a weak break, right? So this is our last structural high point and price has broke above the structural high point with body closure right here. So this has proven that this is the last strong low point and this is the last expectational weak high point. Why am I saying that this is an expectational weak high point? Because I'm just following the structure. And as you can see, our structure on the 4-hour chart is bullish because prices come from the time frame that it will be bullish after the 4-hour change of character. Because as I said in the previous live session, in the fractal time frame live session, if price changes character on the 4-hour chart after a daily demand tap, that will be confirmed that the higher time frame 4-hour chart will be bullish. So price has tapped this demand zone right here, change character on the 4-hour chart. So the overall order flow has changed into bullish. And price is respecting the demand zones over and over again and creating a series of higher highs and higher lows. So creating demand zones right here, respecting demand zones, respecting strong lows, creating highs, creating breakout structures to the upside, creating demand zones, strong lows somewhere in this region. And we'll have to find that demand zone that has created the less strong weak high point right here. And we have to find the less strong low point. Okay, let's just zoom in. What can we see at this region? We can see that price has created this last high point right here, last breakout structure. Let me just mark it with the breakout structure line. So price has created this breakout structure to the upside at this line. And as you can see, this region down here is pretty efficient, right? There's no inefficiency. So we can't really call that this is an inefficient area right here. But as you can see, price has changed character here on the 4-hour chart right here. This was the last demand zone that has caused the last breakout structure and the less inefficient push. But this isn't a strong low point. The strong low point will be somewhere around here or around here. We just have to find a strong low point. I believe that will be on the 15-minute chart because as you can see, as I said, the 4-hour chart is efficient in this region. So what else can we see? We can see that price has changed character here to the downside and started a bearish order flow, slow bearish order flow to the downside, as you can see, which is liquidity. This is a liquidity building up movement because there's liquidity trend line, slow, efficient movements to the downside, meaning it's liquidity building up movement. What else can we see here at this region? We can see that price has created a range, a perfect range. As you can see, there are triple bottoms. Let me just mark it, and there are equal taps here also. So we can call this as a perfect range. What do we know about ranges? I'm asking you guys, what do we know about ranges?
They will be liquidated on both sides.
Exactly. Exactly. All of the ranges, even if these are on the 4-hour chart, even if these are on the 15-minute, 1-minute, 5-minute, any time frame, the ranges will be liquidated. The ranges will be taken out on both sides. So what can we see here? We can see that price is actually liquidated the downside range. As you can see, here was a clear liquidity sweeping movement to the downside at this line. Here's a liquidity sweeping movement. And after a liquidity sweeping movement, sorry, let me just type sweep here. After the liquidity sweeping movement, price seems like change character on the 4-hour chart, right? Why am I saying that it's change character on the 4-hour chart? Because as you can see, here's this inside bar. This inside bar is inside of this candle. So every single inside bar will be supply / demand zone. So this was the last supply zone and price has changed character here to the upside, as you can see with this wick. This is a change of character on the 4-hour chart. But I believe on the 15-minute chart, it will be much cleaner. So we will just refine it on the 15-minute chart. And we can't really identify a good 4-hour zone here at this region because this isn't inefficient. This is nothing. There will be a clean zone on the 15-minute chart, and the 4-hour chart is actually dog shit, as you can see, just like this region and just like this region. Okay, what else can we do on the 4-hour chart? We can find the reversal point. Price has reversed. Let me just find the horizontal line. Price has reversed around here after tapping into some sort of demand zone down at this region, and that demand zone will be inside of this 4-hour candle because as you can see, this wick has been left unmitigated. This is the only unmitigated region at this price section. So this wick down here is the only unmitigated region, which has been mitigated by this following candle. But after the mitigation of this wick, price has actually reversed to the upside and created a 4-hour change of character after the liquidity sweeping movement, right? So what can we tell about the 4-hour chart? We can see that price has swept liquidity here, swept the downside range liquidity and tapped into some sort of 15-minute demand zone down here at this region. What can we expect from the 4-hour chart? We can expect that price will sweep the upside liquidity too, right? Because as I said, ranges will be swept sooner or later. This is a golden rule. Ranges will be swept sooner or later and more likely sooner. So after the downside liquidity sweep, we can expect a 15-minute change of character to the upside, which has happened actually if I switch to the 15-minute chart, you will see it better that there was a 15-minute change of character. So after a liquidity sweeping movement to the downside, prices changed character on the 15-minute chart and started to create a pullback here. On the 15-minute chart, this 4-hour candle will be a pullback, and more likely we'll be able to find a good entry point to somewhere around here on the extreme of the 15-minute leg. Okay, so the expectations are actually prices swept the downside liquidity range, tapped into some sort of demand zone. Let me just put back the line right here. Price tapped into some sort of 15-minute demand zone around this region, and started to create a pullback after a change of character to the downside. So let me just switch to the 15-minute chart because I believe that's all about the 4-hour chart. No, actually, sorry, we didn't determine the overall 4-hour target point, which is still this supply zone up here. We've talked about this supply zone several times. This is our overall target point on the higher time frame structure, and we are expecting the top of this supply zone. Okay, let me just clarify one more thing, because some of you guys weren't here in the previous live session, and that live session was about the fractal timeframes. And actually, this is the good example for the fractal timeframes. What do I mean under the fractal timeframes? I mean that all of the timeframes will be confirmed as the main direction. And the main direction in this case is bullish because price has stepped into a daily demand zone down here and changed character on the 4-hour chart. So the 4-hour time frame is bullish, right? Because price has created a strong low point right here, which was created a breakout structure here to the upside with huge inefficient movement to the upside. So the 4-hour has been confirmed that it's bullish. Somewhere around here, as I said, there will be a strong low point. We can expect a reaction on that strong low point, which has happened right here. And after that, a 15-minute time frame will change character to the upside again. So that means the 15-minute time frame will turn into bullish again. So the 4-hour chart and the 15-minute chart right here at this region is bullish. What are we waiting for? What are we waiting for? We are waiting for a less fractal confirmation, which is the 1-minute chart, right? Because each time frame confirms another. 4-hour can be confirmed by the, sorry, let me just start with the daily. Daily can be confirmed with the 4-hour chart. I know I say this in every single session, but it's so important because you guys are keep making the same mistakes and you are keep making the bad change of characters inside of a 4-hour zone and inside of a 15-minute zone. So daily can be confirmed by the 4-hour chart. 4-hour chart can be confirmed by a 15-minute chart. 15-minute chart can be confirmed by a 1-minute chart, right? So the 4-hour has been confirmed. I mean, the daily has been confirmed right here. So the daily has been confirmed by a 4-hour chart. So it's bullish. The 4-hour chart has been confirmed because it broke structure here to the upside, so created a strong low. 4-hour has been confirmed. 15-minute has been confirmed because price has more likely created a change of character right here at this region after tapping into a strong low point. So the daily has been confirmed, 4-hour has been confirmed, 15-minute has been confirmed, and we are waiting for the 1-minute inside of the 15-minute confirmation. So as I said, right here at this region, we are waiting for a 15-minute confirmation. I mean, a 1-minute confirmation inside of a 15-minute zone. Okay. So that's all. Let me just switch to the 15-minute chart and find that depends on the price was reacting on here at this region. As you can see, let me just zoom in. After a sweeping movement right here, price has created this sweeping movement. After the tap of some sort of demand zone right here, it created a strong reversal to the upside and the strong change of character here to the upside. This was a change of character on 15-minute chart on several places, tapping to some sort of 1-minute demand zone down here, sweeping the liquidity here at this region. And after it created a breakout structure here to the upside and a higher time frame change of character right here. And this was the 4-hour change of character that I was talking about. This was the inside bar. This was the inside bar right here, which has prices changed right here, as you can see. So, okay, let me just find the reacting demand zone at this region, which was price was reacting on. And as you can see, here's a perfect demand zone that has created a flip. Why am I saying that it's created a flip? As you can see, here was a bearish order flow at this region. On the 15-minute chart, it created a change of character here to the downside, created breakout structures continuously to the downside over and over again. And after this, we had this less supply zone, less 15-minute supply zone at this region, and price has flipped this supply zone. And the flip has happened from this candle, right? As you can see, price was coming up, reacted on this supply zone, created a flip zone, and from this candle, from this 15-minute candle, this 15-minute demand zone, prices flipped the overall 15-minute supply zone, the last recent 15-minute supply zone in this region. So this is the origin of the bullish order flow at this region. So this demand zone, this 15-minute demand zone has caused this overall bullish order flow to the upside. So this is a pretty strong 15-minute demand zone. We can usually expect a reaction on these kind of demand zones. Okay, so let me just extend this zone real quick. Sorry for your time. So as you can see, prices react on this demand zone. And after the reaction on this demand zone, it changed character to the upside here. After a character changing movement to the upside, it changed character to the upside again on the higher time frame and broke structure here to the upside with huge inefficient push. Okay, this was the last recent 15-minute supply zone inside of the 4-hour supply zone. So price exchange character here to the upside. We couldn't determine a good 4-hour supply demand zone down here at this region. So there's no good demand zone, 4-hour demand zone at this region, but we can easily determine a very, very good demand zone on the 15-minute chart down here, as you can see. This 15-minute demand has started the whole inefficient order flow to the upside, which was leading to a change of character on the 4-hour chart, right? So this is a really, really good demand zone. Okay, I believe that's all about the 15-minute time frame. We can just determine more higher time frame. 15-minute supply zones, for example, up here. This could be our higher time frame target point, or this could be our higher time frame target point up here, which has changed character on the 15-minute chart, right? Because price has changed character here, or just sub change character here. But this could be our last recent 15-minute supply zone because it created huge inefficient movement to the downside, and this could be our target point after the mitigation of this demand zone. Okay, so as I always say, you always have to build a plan, right? You always have to build a plan before every single live trading session, before every single backtesting session, before every single forwarding session. So you always have to build a plan on the higher time frame and on the lower time frame too. So I'm building a plan right now. What can we expect from price right here at this region? We can expect that price will tap into this supply zone and create a change of character inside of this 15-minute supply zone on the 1-minute chart. Sorry. So create a 1-minute change of character inside of this 15-minute zone. Sorry, as I said, I'm really, really tired. And if this happens, we'll be able to target this demand zone down here with the shorts. Second scenario, if price taps this demand zone first and creates a 1-minute change of character inside of this demand zone, we'll be able to target this 15-minute supply zone or this 15-minute supply zone with our longs, right? This is our solid plan for today because there's nothing really much to worry about because price is fractally confirmed that every single time frame is bullish. So there's no chance that this demand zone will be broken because, as I said, every single time frame has been confirmed for bullish. Daily is bullish. That has been confirmed by the 4-hour chart. 4-hour chart is bullish. 4-hour chart has been confirmed by the 15-minute chart right here with this 15-minute change of character. The 15-minute chart will be confirmed by the 1-minute chart if price steps into this 15-minute zone that was leading to change of character right here. So if price steps into this 1-minute zone, more likely there will be a change of character and not a break of this zone. So we can really expect the change of character inside of this zone. So far, everything makes sense for you guys? Everything is understandable?
Yeah.
Yes.
Okay.
All great.
Okay, I was just drinking, sorry. Okay, so basically that's all about the 15-minute time frame. What's the next step? I'm asking you, what's the next step? Just write it down or use your microphone, please.
Wait for the bus.
One more step before that. Anyone? No.
Refinement.
5 minutes.
Yeah, who said the refinement?
Yeah,
It's
me.
me.
Also, we
It's
can
more
wait for
costly.
liquidity creation.
Refine 5 minutes.
Exactly, we need a refinement of the 5-minute. Thank you. So let's find the refinements, starting with this zone up here. This will be, okay, I'm asking you guys. Which zone, how can you refine this zone? Can you just
The
wait?
zone.
Thank you,
Week
Nikita.
level, yeah, the week.
Yeah, thank you, Nikita and
I
Hussein.
use only the week.
Exactly, and can you explain why are we using the week? Only the week?
Because the other candle has mitigated the longer candle in front of it, so we use the week.
Exactly, I was just, what the hell did I just do? Okay, sorry.
Yeah, let's take the
Somehow, yeah, press space.
first. Yeah.
So here we are, back again, back on track, perfect. So we will find this on the week only because the last recent candle before the inefficient movement has been already mitigated by the week, right? By the following week. And all of the orders are sitting on this single week and not on this candle. Just think logically. Can there be any orders on this candle? No. Why?
No.
Because the following week is higher than this actual candle. So there can be orders on this candle sitting because all of these orders have been picked up by this following upside movement. And the original high impact orders have been placed into the market right here at this wick, because as you can see, this inefficient movement can be caused only by BFIs. Every single inefficient movement can be caused only by BFIs, and BFIs have placed their orders on this wick because this wick has caused the inefficient movement and not this upside candle. Okay, next refinement, this supply zone. Again, which is the right supply zone in this case?
Weak zone.
Once again, the wick. This is the right refinement. Let's see this one. I'm asking you again, which one is the right refinement in this case?
Lower candle.
A lower candle, exactly, because the inefficient move has started from this candle.
That candle.
So, as you can see, these are our refinements, and I'm going to keep this 50 mid zone too, because I actually remember for this session, and this was a pretty good session. This will be really, really helpful for you. Yeah.
Someone is saying the supply is in lunchtime.
Yeah, that could be lunchtime, but that's still our target point.
Yeah, still target point. Still.
That's still our target point. We can expect a break of that supply zone, but
We're
we can
not
target
trading on
we
the-
can target
we're
that
not-
zone because that's a good supply zone.
Yeah, we
And-
don't trade on lunchtime, but we can target it.
Yeah, we can place orders on lunchtime zones, but we can actually expect reaction on these lunchtime zones. And how do we actually trade? We trade based on reactions, right? So we are not swing traders. We are not holding our trades for a long period of time. We are expecting for reactions. So if there's a reaction on this supply zone, theoretically there will be a reaction on this supply zone, and let's say a price flips this supply zone, but there's still a reaction on it. There will be a good demand zone that has flipped this supply zone, and we can re-enter on this supply zone. I mean, on this fresh new demand zone, right? We are not holding our trades for swing trades. We are closing our positions on the less recent 15-minute/5 minute supply/demand zone. And the less recent 5-minute/15 minute supply zone in this region is this one right here. So if price taps this zone and reacts on it and gives a break, for example, we'll be able to target the higher time frame supply zones at this region. If price reacts on this zone and creates a change of character on this zone, we'll be able to target some deeper demand area somewhere around here. It's a reaction-based strategy, right? But yeah, we still count the higher time frame lunchtime zones as our target points. We are not taking any limits. We are not setting any limits on those zones, but we can expect a reaction on those zones. Does this make sense? Understandable? Everything?
Yes.
Okay, I will just answer the questions after the backtesting session. So, okay, let me just switch to the 1 minute chart and build a plan on the 1 minute chart too. Okay, what can we see here at this region? We can see that price has built up liquidity here for the zone, right? So here's perfect liquidity. Okay, what can we see? What can we see at this region? We can see that there's a clear supply zone that has caused less inefficient movement to the downside here at this region. And there's liquidity for this supply zone. But this supply zone is inside of the lunchtime fake zone period, right? So we can't expect we can't put a limit order on this supply zone. What else can we see on the 1 minute chart? Literally nothing else, because everything has been marked up on the 15-minute/4 hour chart. So all we have to do is wait for the bus, right? We are waiting for a bus step. We are waiting for a bus to come to our bus step. I will just close these zones. So what I will do now is play price forward and wait for some sort of reaction, even on this supply zone, even on this demand zone, anything. We are waiting for a clean reaction. We are waiting for a clean tap of either the supply zone, either the demand zone, and we are waiting for a clean reaction on these supply/demand zones. And we just play price forward. That supply zone is on because it's inside bar, don't get why. That's basically an inside bar. That's not a really valuable supply zone. These supply zones, as you can see, all of these supply zones are lunchtime zones. So you can't expect a reaction on these zones, but this is the less recent candle that has caused the less recent inefficiency. So I'm always marking the less recent 1 minute supply zone. And this is this. So let's just play price forward and start the backtesting session on the 1 minute chart. So what we are waiting now is a clear tap of the zone, clear sweep of some sort of liquidity, clear change of character, clean break of structure, either the break of the swing high structure because all of these zones, as I showed you, all of these zones are lunchtime zones, so we can't really expect the reaction. I mean, we can't really set an order limit on these zones, but we can expect a reaction on these zones. So what we are waiting now is basically a break of this high point or the tap of this demand zone down here. That's what we are waiting for. We are not acting before anything happens. We are just sitting patiently on our hands, right? Just like in this session, in the live trading sessions. As you can see, liquidity has been formed for this supply zone. There's perfect triple taps, first tap, second tap, third tap. This will be swept sooner or later. And what zone can actually hold the sweep? What zone can reverse price after the sweep? The next recent supply/demand zone. And the next recent supply/demand zone, actually it's a supply zone, is this one. If the sweep happens, if the triple tap sweep happens, this supply zone will be able to reverse price to the downside, and we can expect a reaction on this zone. But can we open a limit order in this zone? Asking you, just circle it, yes or no?
No.
I just
No.
have to make sure that you understand, guys, the lunchtime concept, because it's really, really important, because I saw that lots of you guys are still making trades inside of the lunchtime zone, and you are still opening positions on the lunchtime zones, which you can't. And I just want you to understand this, that we can open a position on this zone, because this zone is part of the lunchtime liquidity zone. As you can see, red, it's red as blood. Red blood means avoid this. Just turn on this indicator and avoid all of the red candles. That's all. Okay, so we are waiting for a, so we are waiting for a clean reaction. Tap of the zone has happened, as you can see. So what can we expect from this tap? What can we expect from this supply tap? We can expect the tap of this demand zone down here, right? And what can we expect after the tap of this demand zone? As I explained you in the on the 5-minute/15-minute chart, we can expect the last fractal confirmation on the 1-minute chart, right? Because every single time frame has been confirmed on the 4-hour chart, on the daily chart, on the 15-minute, on the 5-minute, and the 1-minute chart is waiting to be confirmed. That's the last confirmation of the time frame. And if there will be a change of character on inside of these 15-minute or /15-minute zone, we'll be hopping in a long trade regardless. Okay, what's happening right now is the 15-minute zone has been tapped. Let's just mark out the last recent supply zone that has caused the tap of this zone, and that supply zone was this candle right here, right? This is an inside bar. We could call this as a actually sub supply zone, because this isn't a real supply zone in this case. This is just a small stop in the market. The real structural high / supply zone will be up here, but if price changes character here and breaks above this supply zone, that will still count as a change of character to the upside, because this is still the pullback on the second chart, right? Price is coming down, pullback, 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 and this is how the structure actually looks like. This is a pullback on the second chart, not on the 1-minute chart. This is an inside bar on the 1-minute chart. So if this supply zone breaks to the upside, that will count as a change of character, and we'll be able to open a position on the freshly new created 1-minute demand zone somewhere around here. That's our plan right here on the 1-minute chart. We can really expect a change of character inside of these zones, because every single time frame has been confirmed. Expect the 1-minute chart. So the 1-minute chart have to be confirmed too. Okay, let's just play price forward. I believe lots of you guys remember for this scenario, because this was a last week and we were live trading this scenario, but this is really good. This was a really special scenario, and I will explain why. As you can see, price is reacting on this supply zone, taps the supply zone, and actually changes character. For change of characters, wicks are perfect enough, right? So price is actually changed character here with this week, with actually several weeks. Here's the first week, here's the second week. And okay, I'm just asking you, which zone could be good for entry opportunity right here? Let me just mark the first one right here and mark the second one right here. Which one is better? Let me just, first or second? This is the first, this is the second. Just circle the good.
Second
zone.
The first one is
Second one.
The first one is liquidity for the second one.
Exactly. Thank you guys for your answers. You can remove your drawings. The first one is perfect liquidity for the second one. I just wanted to show you this scenario because, as you can see, this is perfect triple bottoms. First bottom, second bottom, third bottom. So basically the change of character has been happened from this candle, right? So this demand zone has caused the overall change of character. This demand zone has caused the change of character. but this demand zone will be part of the liquidity for the downer area. Actually, what did this demand zone do? This downside, this second zone, what did this do? I mean, the first zone, literally just an inefficiency, right? There's nothing much, nothing else that this demand zone caused, just an inefficiency, nothing but inefficiency. The change of character has happened from this candle, but still this will be liquidity for the downer area, because every single time you see some sort of liquidity, for example, triple bottom, double bottom, trend line liquidity, that will be swept. Sooner or later, that will be swept, and you can't open a position inside of a liquidity pool. Actually, this week's homework was about liquidity. Just this is the perfect scenario for that liquidity sweeping movement. As you can see, this demand zone will be swept. Let me just play price forward. So, sorry, no. Let me just set an order limit on this zone, because this is a perfect entry criteria. And let me just track the criteria first. And actually, I took this trade in live trading because this seemed like the perfect trade for me. What the hell am I doing? Sorry, guys, for making these mistakes. So let's track the criteria. Okay, actually, first criteria. Let me just open a text right here. First criteria. All time frames have been confirmed on the daily, 4-hour, 15-minute, expect the 1 minute. So every single time frame, I mean the 1 minute too, because the 1 minute confirmation has happened here with the change of character. So all of the time frames have been confirmed, meaning this is a main trend, right? Every single time frame is bullish after the change of character here on the 1 minute chart. So every single time frame has turned into bullish. Every single time frame is on the main trend. So this is a main trend trade. Perfect. What has happened? A 15-minute liquidity sweep / 4-hour liquidity sweep has happened. So I will just type it here, the higher time frame liquidity sweep, because here was a liquidity, right? Here was a triple bottoms and price swept that liquidity. So that's one more criteria. Price has swept the higher time frame liquidity. And that's a criteria for us, because if liquidity is being swept into a deeper demand area and price reacts on that demand deeper demand area and changes character, for example, on the 15-minute chart, that counts as a criteria. So third criteria, 15-minute change of character. Fourth criteria, 15-minute zone tap. Fifth criteria, strong reaction, right? There was a strong reaction, tap of this zone and immediate reaction to the upside. This is a strong reaction. We can call this a strong reaction. Sixth, inefficiency, right? That's inefficiency. Seventh, change of character, because there was a change of character. Eighth, were there any liquidity sweep? There were. As you can see, here was a range on the 1 minute chart too. Equal taps, liquidity trend line, or equal bottoms, relatively equal bottoms, or just a liquidity trend line. So prices swept the liquidity, this downside liquidity, into this 15-minute zone. So the 8th criteria will be the liquidity sweep into the higher time frame zone. So the liquidity sweep has happened. 9th, liquidity creation, right? Because there was a liquidity creation. We were just talking about this liquidity creation, this triple bottoms for this downside area. So we can safely set an order limit on the 50% of this candle. And why are we using the 50% of this candle? Quick answer.
Because the wicks are longer than the bar.
Exactly. Chilling markets. Why will there be NFP? NFP was on Friday. And this was Monday. So there's no NFP. So we can easily set an order limit on the 50% of this candle, right? Perfect entry criteria, perfect entry with all of the criteria fit, literally 9 criteria for this zone. Let's go for it. I believe most of you guys remember what happened after this. Sweep, stop loss hit, right? What could be the mistake here? I'm just asking you guys, what could be the mistake here? Which we always run into.
The 50% of 5-minute refined.
Yeah, it has not mitigated the 5 minutes.
Exactly. Exactly. Thank you, guys. That's why I always say that we can always count on a deeper mitigation on a higher time frame zone. Do you remember that I tell you every single time in every single live session or recap video? Not in recap videos, actually in live sessions only. So I tell you in every single live session that we can count on a higher time frame 50% mitigation at least. And if the 50% of the higher time frame zone is being mitigated, then it counts as a mitigation. If less than a 50% of the zone, if it's a 50-minute zone or a 4-hour zone is being mitigated, that won't count as a mitigation. And as you can see, price did not mitigate the 50% of this zone. So this means this zone has not been mitigated. This isn't a mitigation. The 50% wasn't mitigated. It mitigated less than a 50%, so we can't count this as a mitigation. We always have to wait for a deeper mitigation because we can run into trades like this. As you can see, this is a perfect entry criteria trade with 9 criteria, with all of the 9 criteria. But still, price didn't mitigate the 50% of this zone. So what can we do in this case? We don't have to panic. We just have to adapt. And actually, I took this loss in live. I took this loss in live session. That's good. That's perfectly fine for me. -1 risk-reward ratio. What can we do in this case? We can wait for a deeper mitigation of this zone, which 50% of this 50-minute zone lines up perfectly with the 5-minute refinement, as you can see. So we can wait for a deeper mitigation, and we can actually wait for a 1-minute confirmation inside of this 5-minute zone. And if that small change of character, which has happened, you will see, if that small change of character happens, I will go for this trade regardless, with even 3 criteria. If there's no inefficiency, if there's no liquidity creation, if there's no liquidity sweep, if there's just a change of character, I will go for the trade regardless, because every single time frame has been confirmed that it's bullish. And 50-minute tap has happened. It wasn't enough. Price needs to collect more orders from below the 50% of this zone. So if the 50% mitigation of this zone happens, I will go for this trade regardless if there's a change of character. Okay, let me just play price forward and you'll see it. But here's the mitigation. Price has almost mitigated the full zone, as you can see. Mitigated maybe the 80% of this zone. Perfect mitigation. And if there will be a change of character, which will be right here, and if there will be a change of character, we can hop in a long trade and we can write the expectation order flow, right? Let me just play price forward. There's a change of character. That's why I said there was a tiny bit of change of character. As you can see, this still counts as a change of character. Why? Because for change of characters, wicks are perfectly enough, right? So the change of character has happened.
Sorry, Marcel. I just want to ask one question. Change of character, even on the 15-minute time frame, is the wick still enough?
Actually, on the 50-minute or higher time frames, I do not really count the wicks because that could still be a liquidity sweep.
All right, so just for the 1-minute time frame.
That's the best confirmation for the 1 minute. Yeah.
All right, thank you.
I use this on the 1 minute most of the times, but sometimes a 15-minute wick can be. I mean, a 15-minute wick can change character if there's no liquidity for the zone. But if there's a liquidity for the zone, that can be just a liquidity sweep. Hope it makes sense.
Yeah, thank you.
Okay. So I want you guys to mark the zone that has caused the change of character here. It's a really simple zone. Thank you, Nikita. That's the zone. Exactly. I love how Nikita is actually being the first every single time. Good job, Nikita. So this is the zone that has caused the change of character. And as I said, if this happens, I will go for this trade regardless. If there's no liquidity creation, if there's no liquidity sweep, if there's no inefficiency, I will go for this trade. But for advantage, there's inefficiency. There's a change of character, so I will go for this trade regardless. As I said, I will be setting an order limit on the 50% of this candle. And I actually took this trade in live session. 50% entry, 2 pip stop loss, deleting this. And what could be your next target point? Asking you, what could be the next target point? Exactly, the less recent unmitigated 50-minute zone, which is this one in this case, right? Okay, actually, we could easily target this higher supply zone up here too, because our trend has been confirmed that is bullish. As I said, this is a fractal confirmation, and this doesn't really happen very often. This happens really, really rarely. Every single time frame lines up, right? Daily has been confirmed that is bullish. 4-hour has been confirmed that is bullish. 50-minute has been confirmed that is bullish, and the 1 minute has been confirmed to be bullish finally. So what can we expect when every time frame has been confirmed to bullish? We can expect the creation of the new higher high on the 4-hour chart, because as you can see, here was a change of character after daily demand tap. Price has created this high point, pullback, tap of this strong low point right here. There was a 15-minute change of character right here, and inside of the 15-minute zone, there was a 1-minute change of character somewhere around here. So at this region, the fractal confirmation has happened again. what was the actual movement after this, that after all of the 50-minute, 4-hour, 1 minute has been confirmed, and after the fractal confirmation has happened, the new higher high has been created here with the breakout structure, as you can see. So this fractal confirmation is happening here again. What can we expect after this? We can expect a new high, right? And yeah, we know that high has happened because we actually saw that prices created the new high. But I was saying this before that new high actually happened. I was saying this for you guys, that the new high will be created, the expectation higher high will be created before that high has even happened. So what can we do in this case? We can actually swing target the high point with our longs. We can actually target this high point with our longs. Of course, in live sessions, you won't do that with full volume, right? Because you will be stupid. But actually, this could be a less swing high target point. But for the clarity, let's just stick with this zone, this 15-minute zone, because we are backtesting. But we'll see that if price hits that zone and how many risk reward could that actually earn us. But I hope you really understand what I was meaning under this. So let me just play price forward. Okay, the tap has happened here perfectly. Play price forward. Breakout structure has happened to the upside, so our stop loss is in break even. Why is it in break even? Because the last high point has been broken right here. The price has broken about this last high point, so our stop loss is in break even. This is a risk-free trade right now. It's going perfectly fine, as you can see. And let's just map the supply zones and let's just map the flip zones, because we had several flip zones, right? As you can see, here was a clear supply zone that has created a huge inefficient push to the downside. And this was the last structural swing high point on the 1-minute chart. This swing high point on the 1-minute chart caused the tap of this 50-minute zone. And as you can see, prices reacted on this supply zone. Prices reacted on this supply zone. Here, with this movement, tap this zone, reversal, breakthrough. So this is a flip zone. This is a actually swing flip zone. So what can we do in this scenario? We can expect a reaction on the demand zone that has caused the flip, right? This demand zone, this weak zone, has caused the flip of this supply zone. So we can actually set an entry limit order on this zone. Let's see if the full body covers the whole zone. No, it doesn't. Let's just use the 50%. This is our next entry. Okay. Sorry. Is it okay if I just delete this order because it's actually frustrating? Is it okay? Let me just delete it no matter what. So just keeping it clean.
Marcel, can I ask you something?
Yeah, of course.
Why don't you pick the previous candle? Because in this candle, like the wick is smaller than the wall body.
Yeah, actually, but all of this candle has been mitigated, right? There's no unmitigated area left on this candle. Maybe on the downside area, this is the only unmitigated area from this downside candle. So the real inefficiency has started from this candle this week, right? Just think logically again. This candle has been mitigated. Expect this small percentage of this candle. The real inefficiency has been started from this week, right? There's the real inefficiency. Make sense?
Yep. Thank you.
Okay, somebody says that there's triple bottom. This isn't a triple bottom. Triple bottom doesn't look like this. A triple bottom looks like this, not three same candles. This isn't a triple bottom. But yes, that still could be a liquidity for the downward region here. That still could be a liquidity for this demand zone down here. So we can actually use, I was just continuing, we can actually use a double entry limit order. First one on the higher, second one on the lower. 2 pip stop loss, same target point. I'm gonna just keep it this way because it's frustrating. And just play. Yeah.
If we got a 2 POI in 1 minute, we should split the orders.
Sorry, Prakash, your microphone is still bad. Can you just type it, please?
No, if we got a 2 POI in 1 minute, we should split the orders.
Please type it down because I can't hear you.
Okay, I'll
Just
type
write it down. Write it down.
He is asking if you should split the risk in this case.
Yeah, we are splitting the risk every time. But I was explaining this in the previous live sessions. We are splitting the if we are using the double limit entry order, for example, like this, we are splitting the risk. We are setting, if we are using a 1% risk, we are setting a 0.5% risk on this one, and we are using 0.5% on this one. So there's literally nothing to lose in this scenario, right? Because if this trade gets tagged in and goes to profit, we'll be in profit and we'll be happy. If this trade will be swept out, this zone will hold and this will be in profit, and we'll go with 0.5% loss, but this will be in profit. So that's literally a win-win situation. I usually use these double risk entries to have the risk and actually get more precise risk rewards, and to make sure that I will be get tagged in. And please, guys,
Okay, thank you.
the questions after this session. I will mute everyone. So actually, as you can see, for this zone, the liquidity creation has happened, or we can't really call it this is a liquidity. Let's just wait for further liquidity. Okay. Now there's a liquidity. A liquidity creation has happened for this zone. Here's a liquidity creation, double bottom, first bottom, second bottom. As you can see, price is coming down, creating an upside movement, creating the second bottom, creating an upside movement. So we can call this a liquidity. This is a clear double bottom. This isn't a double, this isn't a triple bottom, this isn't a double bottom. This is no liquidity. The liquidity looks like this. So liquidity has to be formed with several candles and with the pullback, for example. So if price is coming up, creating a downside movement, creating an upside movement, creating a downside movement, creating an upside movement, this will be liquidity. If price is printing 2 equal candles or 3 equal candles, perfectly lines up with each other's, that won't be a liquidity. This will be a liquidity, this won't be a liquidity. This is just equal candles. This can count as a liquidity. This is a liquidity, as you can see, double bottoms, and price is on the way down to sweep that liquidity. Okay. Okay. As you can see, price did not tap into tag us into this zone. So this is a miss, but we can still keep this order. I'm going to delete this order because it is too far away. There's still liquidity for this zone, as you can see. There's still liquidity, but not much of a liquidity. But I'm going to keep this order limit right here. And new zone has been formed right here. As you can see, this demand zone has created a huge inefficient push to the upside. Swept liquidity to the upside. There was a trendline liquidity. Loads of stop losses were sitting just above this trendline liquidity. Swing broke the structure. This was the swing high point. This was a pullback, and this demand zone swing broke the last structural high point. Actually swept liquidity from this region to broke above some sort of supply zone at this region. Actually broke above this lunchtime supply, broke above this lunchtime supply. So this is a really valuable demand zone for us. And what we can do in this scenario is to use a risk entry, double risk entry again. If there will be a liquidity formation for this zone, I will just keep this order with a full risk. If there will be a liquidity formation, that will be a perfect opportunity for us to enter, because this is not much of a liquidity. So I will just explain this later. Let me just play price forward. Price is on the way down to fill up the inefficiency, creating liquidity, and creating liquidity trend line, as you can see. Price has created liquidity trend line and created a breakout structure to the upside here, as you can see. Okay. In this case, I would like to ask you that can you open a position on this freshly new formed demand zone that has caused less recent breakout structure to the upside? Yes? No? Exactly. You can't open a position on that zone. Thank you, Jashchuk, because there's a liquidity trend line and you don't want to become part of the liquidity. As you can see, this is a perfect liquidity trend line with several touches. As you can see, price is coming up, coming down, touch, coming up, coming down, touch, coming up, coming down, touch. So basically, this is a triple bottom liquidity trend line. 3 several touches on this trend line. So this counts as a perfect liquidity trend line, and this has been built up for this zone. And there's still inefficiency need to be filled up. So what can we expect from this scenario? We can expect the inefficiency fill up, we can expect the liquidity sweep, and we can expect the top of this zone, right? I will delete this order limit from the downside area here, because if there's a liquidity creation, this is a continuation scenario. There's a liquidity creation for the next less recent zone that will hold. If it won't hold, price will more likely to break below this demand zone and continue a bearish order flow and keep disrespecting demand zones. But if there's a liquidity for this zone, in this case, this will hold. And as I said, if it won't hold, this will be broken too. So I will just keep my order limit on this zone and delete the order limit from this zone. And we are using a 50% entry equilibrium entry again on this zone because there are more wick than candle. 50% entry, 2 pip stop loss targeting the same supply zone up here. And let's see what happens. I will just delete this zone. So once again, sorry. Yeah, actually, me catch. This is my favorite setup. Perfect setup, right? Let me just arrow break down this movement. Price is coming up, coming down, mitigating some sort of demand zone right here, creating another inefficient breakout structure to the upside, creating double bottom, sweeping the double bottom, creating a liquidity trend line, perfect liquidity trend line, creating inefficient movement to the upside, and I can't draw more, creating another inefficient movement to the upside with a breakout structure, perfect breakout structure, fake zone, which will be part of the liquidity. So basically this demand zone, this fresh new created demand zone is a liquidity. You can't count on this zone, but there's a zone which has created the inefficiency and the liquidity, and this will be the perfect zone to enter on. So basically this is my favorite setup, right? There was a cancellation, breakout structure cancellation right here. There was the actual cancellation breakout structure right here. There was a liquid creation for the fake zone. All of the orders will be taken out at this zone. All of the retail traders will be swapped out who are going to open on this zone. We are going to wait for the liquidity sweep, and we are going to wait for all of the orders to be swept, and we are going to wait for this zone to be tabbed. So basically, this is my favorite setup. That's perfectly good and fine. So we can expect a reaction on the downside area. Let's see. Actually, as you can see, price is reacting on that zone. Price is reacting on this demand zone. So the orders are still there. This is a footprint of the orders. The orders are still there. Price is still picking up the orders at this region. Price is still converting shorts into longs. So more long orders are being opened at this region. That's why price has created a pullback here at this region. But this will be broken because there's liquidity and price has just built up more liquidity. As you can see, that's broken. That's all. And we can wait for a tap of our zone because more liquidity has been created, because there are trillions, not trillions, but billions of dollars are sitting just below this line. Just imagine how many retail traders have opened positions on this line. Retail traders. Oh, this is the third bottom or fourth bottom. I just open a position right here. They open a position, they will be swept. We are waiting here at our bus stop. We are waiting for the liquidity sweep, and that's the importance of the liquidity. We are waiting, and we are opening positions after all of the liquidity is being swept. Basically, that's what this smart money is. That's smart money. It's smart because we are waiting for the orders to be swept out, and we are entering in the market after the orders are being swept out. So we are entering with the fresh new orders, right? After the old orders are being swept out, we are entering with the freshly new placed orders that has been converted into new orders. So liquidity sweep, that's all. Basically, that's all. This is how liquidity works. If you got a good zone that has liquidity above it or below it, if it's a supply, there will be a below liquidity. So in this case, if you have a good demand zone that has liquidity above it, you can just simply open a position on the demand zone. Of course, if it's a main trend trade or if there's any good criteria lines up with this criteria. But yeah, this is how liquidity works. And as you can see, reversal. Perfect reversal. Okay. There was a mistake in this session that lots of you guys who has opened this trade did set their stop loss to break even. And I just want to show you that why can't you set your stop loss at break even at this region. So let me just show you. This is the less recent supply zone that has created a less recent inefficient push to the downside here, right? Price is reacting on this supply zone, as you can see. We are not setting our break even or stop loss into break even because price did not break above the last recent high point, right? Right. No break even yet. Price has broke above this supply zone. So theoretically, we have to set our stop loss in the break even, right? I'm just asking you, we have to set our stop loss in the break even, right?
Yes.
Yes.
Yes, no. Okay, yes, you have to stop. I mean, you have to set your stop loss to break even. But in this scenario, you can't. Why am I saying this? Because there's a liquidity again. Always pay attention to liquidity. As you can see, first bottom, second bottom, perfect liquidity creation, coming up, coming down. I mean, that's even a triple bottom because coming up, coming down, first bottom, coming up, coming back down, second bottom, coming up, coming down, third bottom, perfect liquidity line at this region. This is a perfect liquidity line. And if we set our stop loss into break even, what do you think? What will happen? We will be liquidated, right? We will become part of the liquidity. So you can't set your stop loss into break even at this specific scenario because you always want to pay attention to liquidity. If you set your stop loss into break even, you'll be liquidated. You'll become part of the liquidity, and price will continue without you after speaking liquidity, after collecting your order. And after collecting your order at the break even point, more orders will be placed here at your break even point, and price will continue without you, right? You always have to pay attention to the liquidity, and you always want to pay attention to the liquidity when you're trailing your stop loss. You want to trail below the liquidity lines. So you don't want to get stopped out even if you're trailing your stop loss. That's it. Let's just play price forward. Sweep of the liquidity, right? Sweep of the liquidity has happened. All of the stop losses have been collected from this region. All of the stop losses have been collected from these orders who set their stop losses into break even. Maybe it was your orders too. All of the stop losses have been converted. Look what happens. Continuing without you. Let me just play it fastly. Continuing without you. Every single order have been stopped out right here, and all of the break-even orders have been stopped out right here. New orders have been placed here at the break-even point and after liquidity sweeping movement. What happens? Continuation. Does it make sense for you guys? Do you actually understand the liquidity? Just circle it again.
Yes.
Perfect. You can't open a position inside of a liquidity pool. You can't trail your stop loss below a liquidity pool. You always want to consider the liquidity pool because markets are moved by liquidity. Everything moved by liquidity. And this is really, 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 really important. You don't want to become liquidity. Smart money is playing around liquidity, playing after liquidity is being swept. That's why we call it smart money, as I told you earlier. This is smart money because we are entering after all of the stop losses are being swept. We don't want to get our stop losses being swept out, right? All right, that's all. Let's just see and place back the order right here. This was the original order. Targeting this supply zone. Right here, and just watch it hit TP. Perfect TP hit. That's all. That's it. Let me just close these zones. First zone, first entry point is for 1 to 20 risk reward ratio. So this was a 1 to 20 risk reward. Second zone was for 1 to 10 risk reward ratio, I believe. I will just check it. Why can't I see it? Yeah, it was 1 to 11. So overall, 1 to 31 risk reward ratio in the single session, following the main trend, right? And we are closing the positions at the first supply zone, which is unvaluable. This is the first supply zone, and it's actually unvaluable because it literally did nothing beside of the inefficiency. There's only inefficiency that has been caused by this candle, only inefficiency that has been caused by this supply zone. So realistically, we could target this zone because that's our less recent valuable supply zone, higher time frame supply zone. So let's just see if you target this zone, target the less recent valuable unmitigated supply zone at this region. Would it hit TP? Let's see. Yeah, there's the TP hit. There's the TP hit, right? And if target this supply zone up here, which is the less recent valuable unmitigated supply zone, this isn't valuable up here. This would have been 1 to 30, 1 to 20. This could have been 1 to 50 risk reward ratio. And of course, this goes on and on and on and on and on and on because we are lining up with the main trend. We are trading main trend. every single time frame has been confirmed to be bullish. This is the importance of the fractal confirmations. As I said several times, daily has been confirmed that it's bullish. 4 hour has been confirmed that it's bullish. Yeah, actually, Marcus, we have one loss, so it's 29 risk-reward ratio. Sorry. So 4 hour has been confirmed that it's bullish. Daily has been confirmed that it's bullish. 15 minute has been confirmed. 1 minute has been confirmed. So basically, all of the time frames have been confirmed. Every single time frame have been confirmed to be bullish. So what can we expect in this scenario? We can expect the new higher high. Let me just play price forward. We can expect a new higher high. That's it, guys. That's literally it. Importance of the fractal confirmations. Just imagine if you targeted this high point right here with both of your trades. And basically, this is the best possible entry point that you can get. This is the best possible entry point because you were opening a position on a strong low, on a 4 hour strong low. Price exchange character on the 15-minute chart after tapping into a 4 hour strong low. Price exchange character after the 15-minute change of character. So the fractal confirmations has happened. So this is the best possible place to open a position and target the swing highs. This is literally the best position. And this could have been, let me check it. Sorry. This could have been 1 to 1 to 84, 94, sorry. And this could have been 1 to 83. And that's it. Importance of the fractal confirmations. What's it? What's there? So yeah, guys, actually I collected, I believe, 14 risk-reward ratio on this session because I was sick and this was on Monday. And, you know, I was sick, having troubles. I won't mention them. And I closed my position on 1 to 14 risk-reward ratio, somewhere around here. I opened the position down here on the best possible place. And I closed somewhere around here in 1 to 14 risk-reward ratio. So yeah.
I have a question, please. How do you choose? Because I noticed you use the 15 minutes to choose your TP, and you also use the 5 minutes, right?
How do I choose my TP?
Yeah.
The TP I use is always the less recent unmitigated 15-minute area.
Oh, okay. So not 5 minutes.
You can use the 5 minutes too. If that resonates with you more, you can use the 5 minute. If I'm taking a main trend trade, I'm using the last recent 15-minute zone. If I'm taking a counter trend trade, I'm just closing it at 1 to 5 risk-reward ratio.
Oh, okay. It's in the 5 minutes, right?
Currently we're on the 15-minute.
No, I'm saying using the 5 minutes if you're counter trending.
No. I'm just using a 1 to 5 risk-reward ratio, not the 5 minute.
Oh, okay. I get it. Thank you.
So yeah. And in this region, this is the last recent valuable 15-minute supply zone. This is the last recent valuable 15-minute supply zone which you can target because as you can see, this has been mitigated, this has been taken out. This isn't a real supply zone. This couldn't change character, and this couldn't break structure, it just created inefficiency. So the last recent valuable supply zone at this region is this one, right? That's it. That's our target point.
Can I ask you something real quick?
Yeah, of course.
If you go back to the 1 minute.
Yes, sorry. Bear with me. Here we are.
I don't really understand why first you had this zone and then doesn't it count as a trendline liquidity?
You mean this one?
Yeah.
No, I just explained that isn't a liquidity because liquidity have to look like this. This is trendline liquidity because price is going up, coming down, touching the trend line, going up, coming down, touching the trend line, going up, coming down, touching the trend line. So this is a trendline liquidity right here. This isn't a trendline liquidity. This is
I mean this one. This liquidity is. Do you see
Sorry for moving the screen. Yeah, I can see it. Yeah, you can actually count it as a liquidity, but this isn't a strong liquidity because liquidity has been swept by this candle, right? Here's liquidity, as you can see. First bottom, second bottom. This is liquidity. This is liquidity sweeping movement. So more likely there won't be any liquidity here at this region because the liquidity has been swept right here by this following candle.
So after when they get swept, there's no
Liq-
more liquidity on those zones.
Basically, you can say that because liquidity has been swept, new orders have been created right here. I mean, right here after the liquidity sweeping movement, and these new orders will be picked up if price taps this zone. So the liquidity has been swept. There's no more liquidity.
Okay. Thanks.
You're welcome. Oh my God, guys, so many questions in the chat. Let me just see the questions. For counter trend minimum, there must be 15-minute check. If you want to short, for counter trend trades, you won't really get a 15-minute change of character. Counter trend trades are usually on the 1-minute chart. For example, counter trend trade could be like price is moving up, creating, this is a 15-minute chart, creating this type of structure, and counter trend trade could be like if price changes character here on the 1-minute chart, this will be a counter trend trade. This movement will be a counter trend trade down to the 15-minute demand zone. If price changes character on the 15-minute chart, changes character here, the shorts will be the main trend trade. So the counter trend trades are usually on the 1-minute chart based on the pullback of the leg. Counter trend trades are always pullbacks in the main trend. Counter trend trades are the pullbacks of the main trend, creating the main trend movement, creating the counter trend pullback movement. You can trade the counter trend movements down to the next recent 15-minute zone, in this case, demand zone. After this, you can expect a new higher high, trade it.
So you consider 15-minute as a main trend?
Main trend can be determined on the 15-minute and the 4-hour chart. As I said, each time frame are fractal. There will be a main trend on the 15-minute chart, and there will be a main trend on the 4-hour chart. If the 4-hour chart looks like this, 4-hour chart looks like this, the 4-hour chart trend will be bullish, right? But the 15-minute chart trend could be bearish. On this leg, for example, this is the 15-minute structure. 15-minute can change character right here, and the 15-minute can be turned into bearish. So the 15-minute trend right here will be bearish until it taps into a 4-hour zone and changes character again on the 15-minute chart. After this, the 15-minute trend will be bullish again, and it will be the main trend again, lines up with the 4-hour trend. That's why I say timeframes are fractal, trends are fractal. What if 4-hour? Yeah, that's what I was explaining. If the 4-hour is bullish and the 15-minute is bullish also, that's when this scenario happens. So let me just see. This is the 4-hour chart, right? I'm just drawing the 15-minute now. So this is the 15-minute, and you can actually trade the 15-minute pullback. So this is the 15-minute structure, and price changes character here on the 1-minute chart. There's 1-minute change of character. You can trade the 1-minute chart down to this demand zone, this 15-minute demand zone. That will be a counter trend trade on the 1-minute chart, and price lines up in the main trend because 4-hour is bullish, 15-minute is bullish, 1-minute is counter trend. Yeah, there has to be a good criteria. Understandable? Can you do a rapid backtest on random? No, I can't, because trading you only allows you to backtest the last maybe 4 or 5 weeks. So I can only backtest March.
How can I get your flipping fake zone candle?
It's in the resources channel.
Oh, okay. Thank you very much.
Flipping resources channel. Yeah, actually, markets are dangerous. That's why we call it counter trend. Every single counter trend trade will be dangerous, of course.
I link the indicator into the questions channel, guys.
Are there situations where I set my break even earlier than actual break of structure when it's a counter trend trade. And for example, in a counter trend trade, let's say this is a counter trend trade. We enter here and price reacts on this supply zone, on this 1-minute supply zone, and reacts strongly on this supply zone. I set my break even, I set my stop loss in the break even. and when session end is near to close. Have you guys got any more questions? So 4 hours bullish, 50-minute is bearish, so the counter trend trade is short. If the 4 hour is bullish, the 50-minute bearish can be a main trend. So the 4 hour is bullish. This is the 4 hour chart, right? Let me just draw it real quick. Let me just do this. So the black is the 4 hour chart, which is the main trend. The red is the 50-minute chart. Here, the 50-minute is bullish. So the 4 hour and the 50-minute is bullish, right? Price breaks structure, and after break of structure, it changes character on the 50-minute chart. So the 50-minute turns into bearish. At this region, the 4 hour chart is bullish. Of course, it's bullish. The 50-minute is bullish. But after a change of character on the 50-minute chart, it turns into bearish. So the 50-minute will be bearish. So our 1-minute main trend will be bearish at this region. 1-minute and 50-minute trend is bearish at this region, but we know that the 4 hour trend is bullish. So we can expect a reaction on the less recent strong low point. So we can expect a reaction here on this 4 hour low point. We can expect a change of character on this 4 hour low point. So the 50-minute chart will turn into bullish again. And if this happens, there will be a demand zone that has caused the change of character on the 50-minute chart, which has turned the 50-minute to bullish again. And after this, we can expect a reaction, and we can expect a 1-minute change of character also. This will be the 1-minute chart. We can expect a 1-minute change of character, and we can expect a 1-minute entry point. And we can continue the overall main trend, which is bullish on the 4 hour chart. But this is being explained in the video course, actually. You manage in 5 minutes some situations? Rarely. I mainly manage my positions on the 1-minute chart because 5 minutes and 1 minute is almost the same. So guys, that's it for today. I will stop the recording now.